what I realized is that I could do this in real estate. I could make pro athlete money in real estate. And so that really kind of started my journey into the investment world and where I am today. And I'm doing it full time. I recently left my job in the corporate world after becoming financially independent through my investments in real estate syndication.
Welcome to the Apartment Investing Journey, where we explore every facet of multifamily investing and development with top investors, brokers, and service providers who share their strategies, successes, and secrets to help you on your apartment investing journey.
Hey guys, welcome to the Apartment Investing Journey. My name is David Robinson. Our guest on the show today is Ryan McKenna with McKenna Capital. Welcome to the show, Ryan.
Thanks, David. Appreciate you having me here.
Yeah, my pleasure. Looking forward to getting into our conversation today. A little bit about Ryan. Ryan is a full-time real estate investor and founder of McKenna Capital. McKenna Capital is a private equity firm that provides opportunities for investors to become passive equity partners in institutional quality, recession-resilient real estate. That's a tongue twister there.
Tongue twister, yeah.
Institutional quality, recession-resilient real estate. McKenna Capital focuses on value-add multifamily, self-storage, and manufactured home parks, and has helped investors allocate capital in more than 6,500 units with a combined asset value of over $600 million. Wow. That's awesome. And just observing you from a distance, I also know that you're a busy guy. You have a family, a wife, and I believe a couple girls, and just all around busy guy and a good guy. I've as I mentioned, I've watched you from a distance, and I've just been really impressed with how you hold yourself. I think that you are very genuine and concerned about doing a great job in this industry and with the investors that you work with. And so I'm excited to talk about that today. But if you don't mind, I want to hear about your story. And I think you've got a cool story to tell that will resonate with a lot of people. And if you can, just back us up and maybe let's start when you graduated from high school. Like, tell us what happened after that.
So when I graduated from high school, I actually went on to play baseball at Arizona State University, received a scholarship there. It was my dream school to go play baseball at, and it was one of the top universities out there as far as Major League Baseball draft picks. And so I knew that just getting the opportunity to play at that level was just going to be a great experience. And I had worked almost my entire life to get there. I remember when I was 12 years old, writing down my goals. I wanted to play, center field for Arizona State University. And sure enough, several years later, that dream came true. And so I was on this journey, on this path to, someday, maybe get to the major leagues. That was always the end goal, and pursue, something I was so passionate about and a dream of mine. And so I get to college, and, here I am playing baseball with some great teammates. Our recruiting class was ranked number 1 in the country. So we just had a ton of talent that was there. And just to be able to be part of that was something special. And if I fast forward a little bit, end of my sophomore year, I'm actually starting, I'm playing, doing well. I ended up getting really sick, had to pull myself out of a game. It was towards the end of the season, and I just didn't know what was going on, but I just knew something wasn't right. And I quickly found out after, going into the emergency room that, they ran some tests, and initially they thought I had leukemia or lupus because I started having these spots all over my body, these bruises. And so I ended up getting diagnosed with ITP, which is the blood platelet disorder. And that moment really changed my life because here I am sitting in a hospital bed, and the doctors basically told me your baseball career is over. And so I'm, wondering what am I going to do? And I didn't really, believe it at first. And I ended up kind of living in a bubble for 6 to 8 months, in and out of probably 20 hospitals, because we were trying to figure out what was going on with me. Is it salvageable, where I could potentially have some sort of surgery to, be able to come back? And it was through those times that I really had a lot of thought and had to think about the future, what I was going to do. And that's when I stumbled across real estate, specifically the book Rich Dad, Poor Dad by Robert Kiyosaki. And I just started consuming a lot of real estate investing books. And I actually had a teammate of mine, his father was an apartment syndicator. So he became like a mentor to me on those early years where I learned about the business. I thought it was really cool, something that I wanted to aspire to do someday. And here I am, in a hospital bed thinking like, wow, my career is over. I've got to find a new path. And so real estate was right there, at the forefront because it had a lot of the elements that I wanted to have by playing professional baseball, like the freedom and flexibility at some point in my life where I could spend more time with my family, go on vacations, and have my money work for me. Because the plan was always to make some money in baseball and then invest it, wisely. And what I realized is that I could do this in real estate. I could make pro athlete money in real estate. And so that really kind of started my journey into the investment world and where I am today. And I'm pursuing another passion of mine, which is real estate investing to the fullest. And I'm doing it full time. I recently left my job in the corporate world after becoming financially independent through my investments in real estate syndications. So kind of a long journey, but it's one that I wanted to share because it's my why, it's my motivation. It's why I'm super passionate about what I do. And, in life, you're going to face adversity. You're going to be thrown a curveball, and it's all about how you react. And when you get knocked down, it's about getting back up. And so I don't have any regrets. I look at the path that I was on, and I wouldn't have wanted anything to change or have it any different way because I'm really happy with where things are today.
Yeah, that's an incredible story. And I can imagine that transition from, having great aspirations and on the track to do, something that was a dream of yours your entire life. And then having to shift that entire mindset to a whole new world. But I can imagine that once you got through that, that initial, shock of that your life was changing, that a lot of the same passion, the same dedication, and the same commitment, and the same values that you had in the baseball world translated fairly well into this new endeavor. Is that fair to say?
Yeah, that's very fair to say because I could take a lot of my, energy, time, motivation, discipline, the same skill sets that allowed me to be able to get to Arizona State and to play on the team. I transferred that over to the business world. And I remember telling myself, if I can't do it in baseball, I'm going to be as successful as I can in the business world. And so that's really, propelled me, mentally to really focus in on, my new path, my new goals. And so I was able to shift a lot of that work ethic into the business world. And it's allowed me to kind of get to where I am today, probably much faster than maybe had I just kind of, not gone in it with, 100% and just kind of, took my time and tried to figure it out. I mean, I was pretty motivated, kind of a chip on my shoulder because of the experience, but I took something that was negative in my life and made it a positive, and it's propelled me and to do so many things that maybe I wouldn't have done otherwise.
Yeah, I can imagine. So we fast tracked from you getting sick and all of a sudden you're financially free through apartment syndication as a passive investor. So just to set the stage here, most of the guests that we've had come on the show have been active investors or brokers. And you've taken a different angle with the real estate investing business and have really approached it almost exclusively, I may be wrong on that, but almost exclusively from a passive investor standpoint. And so I'd like to dive a little bit more into that and maybe bridge the gap from being in the corporate America world and the process that you took to eventually get yourself out of corporate America and be able to focus 100% of your time on McKenna Capital.
Sure. So my first real estate investment was back in 2006. So kind of after I got out of college, that passion was still there. I wanted to do something. Obviously, I had to, make a living. And so I did my first real estate investment. It was a single family rental. And so like most getting into the business, kind of dipping your toe in the water, trying to learn. And I did learn a lot from that experience, what it was like to manage tenants, to, look at a P&L and to do all the, other things that kind of come along with owning rental property. And after a few rental properties, I realized that if I wanted to scale this business, kind of like the same, strategies that I learned in, Rich Dad, Poor Dad, and from my teammate's father. If I wanted to kind of get on the big stage of, doing the larger syndications, I needed to move into that world. And so after learning and doing several single family rentals and also excelling in what I would say the corporate world, I did fairly well and, made some good money that I now had the ability to go invest it. And that's really where my business took off. And so I was able to do it in a relatively short period of time. I started investing in multifamily syndications back in 2016. And, but I did have, a lot of investments and saved a lot of money over the years and just was looking for the right opportunity to kind of deploy it. And so when I did that, I ended up investing in 12 deals as a passive investor. The first 5 were with my teammate's father, his business. So it was kind of cool to come full circle on something that I had learned first from him. And then now I got to invest in their syndications. And then from there, I started to invest with other syndicators because I wanted to learn and be exposed to other markets, because in the real estate syndication business, diversification is key. So I just started investing in different markets. And then I had every intention of, going out and doing my own deals, doing my own syndications as I was, having friends and family and coworkers that were interested in investing as well, because they saw what I was doing, and I was really happy to share what I was doing because I felt like it was a great vehicle to achieve that financial freedom that most people get into real estate investing for. And I was, doing it by working in the corporate world, but just investing my money instead of putting it in the stock market. I was putting it into real estate syndications because I really liked the cash flow that was coming off of these deals, and then the equity upside that I was able to get when they would execute on the value add plan. And then also someone, who's very conscious about taxes. Real estate syndications and real estate in general has some very generous tax benefits, which as an investor, are tremendous. And so there was a lot of things that drew me to the actual investments, but then it was just a matter of going out and making these investments. So I had some really strong cash flow streams because a typical syndicated deal that I was investing in and fairly common today is around an 8% cash on cash return. So I was able to generate that off the money I had invested. And then over time, we would go through some cash out refi. So I get some equity back. And then I would just continue to keep reinvesting. And eventually it kind of snowballed and got to the point where I became financially independent. But along the way, I was also trying to work with other people who wanted to do it. And I just didn't necessarily have a vehicle because I was out trying to find my own opportunities. And it wasn't until I realized that instead of, me trying to kind of do everything, real estate is all about partnerships and having great partners. And so when I went and found some great partners that I could syndicate these deals with, that I could be part of the GP and work with them on a myriad of roles, I could, do everything I wanted to do. Because when I was building my business, I wanted to work with the investors. I was that investor, and I wanted to kind of have a role instead of being more on the asset management and kind of the underwriting, the operations. I wanted to be, manage and work with the investors. So my business really, started to accelerate when I was able to co-syndicate deals with other operating partners, bring investors in and work with everyone together. And we started this about 18, 19 months ago, and we've been very, very active. And I've just seen the investor base grow. I've seen the opportunities grow, and I've been right in the middle of it all along the way. And it was been fun to kind of marry a passion, with not only real estate investing, but to help others get into this and to learn about these great, syndications. Because I would say most people don't know these real estate syndications exist out there. I mean, I think everyone very familiar with the stock market. And so anytime I can have a conversation with someone that hasn't heard about these opportunities, it's very fulfilling because I feel like I was lucky at an early age to learn about this. And I just want people to know that it's out there. And whether or not they invest in it, it doesn't matter to me. It's just more about educating them, because at the end of the day, they can make their own decisions, but they should at least know that there's other opportunities out there.
Yeah, and I want to dive into that a little bit deeper about someone who is interested in getting into syndication from a passive perspective. I have a handful of questions for you on that. If I heard you correctly, you said that you first started out in 2006 when you bought your first investment property. And then we jumped to 2016 And that was when you bought your very first, or got involved in your very first apartment syndication. Did I hear that correctly?
Yeah, that is correct.
Bridge the gap between 2006 and 2016 for us.
So yeah, the reason the real estate, I guess it never fell off from a learning and education standpoint. I'd always been, just consuming as much as I could because I knew that investing in real estate was going to be my ticket to freedom. What I did over the 10-year period is I built another business on the side. So kind of had another side hustle that took a lot of my time, which allowed me to have a lot of, cash to invest into real estate. And so I spent a lot of time building that business and did some real estate along the way, but it was more or less kind of building the business up. And then when I was able to unlock some capital, that's when I put it all into the multifamily syndications. And so, and again, I was doing that on top of a full-time job. And then, I created my real estate business while I was working full-time too. So I guess a little common theme is, the side hustle here. It's really what's allowed me to kind of get ahead and to really accelerate some of these investments to put myself in a position where at the end of the day, I could just walk away if I wanted to.
Well, and this is cool, and I think it'll resonate with a lot of our listeners that may be in corporate America, they may be in sales, they have good income, and they may be, putting money away in a 401k or investing in the stock market, and maybe they're not seeing the type of returns, or they're looking for another avenue to build wealth. And this is exactly what you did, and you went through that process. Let's talk about the passive investor side of real estate syndication. You work with a lot of investors that are similar to where you were. They have a good income, they have capital, but they may not know what to do with it. And so if you maybe can just describe for me the typical investor profile that you work with, that you come across. What does that look like for you?
Sure. They're very similar to myself, which I feel like it's easy when I'm talking with them because, I was that busy working professional that, had a good income, or was that entrepreneur, that executive that was busy building something, but I didn't necessarily, have all the time to go find those deals. Nor did I necessarily want to. I wanted kind of something served up to me where I could, look at it, analyze it, and if it was a good, investment, just deploy my capital and let someone else professionally manage it who was in a market that had maybe a competitive advantage in that market that was going to, far exceed what I could do on my own. Because what I've learned is that, there's still a lot of people out there that are working full time and they want to get into real estate, but maybe they go the active route because that's what they know. And I've done that. And what I've seen is that, yes, you can do that. You can be successful. But sometimes I think you limit yourself because you're typically investing in your backyard, the local market that you know well. And that's totally fine. You can make money in any market. But what I feel like you miss is the opportunities in other great markets. I mean, I live in Chicago. I'm not investing here personally. I've my focus has been kind of on the Sun Belt regions of the U.S. where there's just, tax-friendly warm weather states where people want to move to and businesses want to operate in. And so I think as an active investor trying to do that on the side, it becomes challenging and you can't leverage others to do that. And then it also, I think, can be more risky because here you are, doing this part-time and now you're taking on your own property that, ultimately you're responsible for. And typically you're having to put more of your own capital in to manage it because you're buying it yourself versus having a smaller piece in a larger syndication. So that's kind of my story. And it resonates with a lot of people because they're in the same boat. No one really wants to get those calls to fix toilets or to go, deal with this issue. So to kind of take all that off your plate and to put it in a vehicle where I've seen, far greater returns for doing absolutely no work after you invest. I mean, to me, it's just a pretty amazing benefit. And then to still get all the tax benefits as if, you owned it outright too, because all that flows through to the investor. And I'm just seeing a tremendous amount of interest and through that 10-year period too, I was also building my relationships with others that, I never knew this opportunity was going to come along, but when it did, it all happened fairly quickly because I was always kind of planning and building and then surrounding myself with people that I knew would have interest. So my approach was always, it was not a sales pitch. It was presenting an opportunity to learn about these types of deals. And I just looked at it like, I hope people in my network would think of me as someone that they would want to share an opportunity with if they came across it. So that was really kind of my focus, my approach, and just sharing my story. Again, it resonated with a lot of people that are, busy working and maybe looking to grow some long-term wealth or create some passive income.
Let's say that someone's listening that is the busy professional that wants to get into real estate but doesn't have the time to do it. They have capital, they have good income, but they don't have the time nor the wherewithal to go out and find a great opportunity. Can you walk us through what a passive investor could expect? Let's just say if they wanted to work with you directly, what would be the first steps, and maybe walk us through that process of what the typical investor would experience in working with, a syndication group and with someone like you?
Yeah. So what I would recommend, or what I would say, is that, typically the way people find me or learn about these opportunities, maybe they're doing some sort of research, on the internet, or talking to other people that have invested as well. So I would say first and foremost, education is number one. Learn about, once you kind of know and are familiar, it's always good to kind of learn from others and to see what they're doing, because I think you're going to be able to ask better questions when you at least have, a better sense of, how these deals are structured. But it's okay to, start with, not having, much background. And that's kind of where we come in to help and walk the investors through the structure of the deal, what it's going to look like, what the communication process is going to be like, because these are illiquid investments. I mean, we want the investors to know that, yes, you can generate outside returns that are going to be much higher than most investments out there. But in exchange for that, your money is going to be tied up for 2 to 5 years. And that's why we work with individuals that have, higher net worth or are accredited, because they typically aren't going to be in a position where they're going to end up needing that money, because it's not like the stock market where you can just, press sell and 2 days later you get your funds back. So we walk them through, from the initial stages before we even share an opportunity, we learn about them, their maybe investing goals in real estate, and, financially kind of what they're looking to achieve. And I hear a lot of the same stories, like, look, I want to build some more passive income. I want to grow my long-term wealth. Or maybe it's like, I need to reduce some of my tax liability, and real estate investing is a great way to do so. Or it's just diversification. They've got a lot of money in the stock market, and they're like, I'm just a little uneasy just with what it's going to look like in a few years. And the volatility just kind of, it gets me, the up and down roller coaster ride that a lot of people are on. They would prefer to have more consistency and reliability. And our deals are structured where there is that cash flow component where there's not as much volatility. You can pretty much count on it. And, while the equity is being, grown over time by the reposition of the asset. So, we kind of walk through and talk about all that. And then, I will share some examples and maybe some previous deals that we've done to kind of give them a feel for, this is what it would look like. These are very, similar deals that we're working on. And then they can kind of get their arms around, like, okay, if I invested X, this is maybe what I could expect. And even though there's no guarantees, but we just kind of go off of, track record performance. But, most people, they get it, they understand it, and they're so appreciative that they were able to learn about it and then have someone be there to answer any of their questions. Because that's the one thing I really love about being able to do this full time, is that I can respond to all those questions. I can work with the investors. I can give my time to them, because that's what they need. That's what I needed when I first started. And then, once the deal's put together, we have a nice investment summary that lays out the business plan. It talks more about the team, the market, and just how they're going to execute on the deal. And then we typically have a recorded investor call too that goes into more details. It's a chance for the investors to hear straight from the operating partners that are going to be essentially handling their money and managing it. And so there's a lot of education, like I mentioned, that goes around it. And then, once an investor invests, then, I'm involved all the time with them. And I provide monthly updates on the deal, the progress of the renovations. And then, quarterly, the investors get financial details, the rent roll and all that stuff. So it's kind of cool, because you get to kind of invest in real estate, but you don't have to really do anything. Everything kind of gets served up to you. And what I've seen is that out of my investors, the numbers, it's got to be close to 99%. Are doing multiple deals, because once they do it and they understand, they feel comfortable with it, then it becomes a long-term strategy, and they're diversifying in different markets with different, operating partners. And so that's really where it gets fun, because you're essentially trying to build your own real estate private equity portfolio, and you can do it through multiple opportunities. And that's usually the kind of the end goal, the end strategy. But a lot of investors are, they tell me, I want to be, in your position in a few years, or kind of do what you're doing. And so that's where I'm here to kind of try and help and share stories and kind of experiences, how it worked for me, because everyone's got their own unique story. But I'm kind of here to say, look, you can do this through, passive investing in real estate syndications versus, kind of the more active real estate investor that we all kind of know. That story's there. You can obviously achieve financial freedom through that means, but this might be a little easier way for those that have a little extra capital to invest.
That's great. Thanks for walking us through that explanation. We need to start winding down here. You've been gracious with your time, and I don't want to take too much more of your time, but I've got 3 simple questions that I want to ask you. Just want to get your knee-jerk gut reaction to. You ready?
Sure. Yeah, let's go.
Right. Okay. What is the biggest mistake you've made on your apartment investing journey so far?
Not starting earlier. If I known earlier on, I would have done more of the multifamily syndication and maybe not had that gap between 2006 to 2016. I would have loved to maybe start, a few years earlier. I just think it could have been, further ahead than where I am today.
Cool. Love it. What's the biggest win you've had on your apartment investing journey so far?
So for me, the biggest win is the way the deals are structured right now, because I've got so much diversification in my portfolio that I think for me as an investor and a syndicator, I can bring diversification to investors, but I'm also doing it myself. And so to me, that's a win. It's not any one particular deal. It's the combination of the 15, 20 deals that my capital is invested in that's growing that I feel good about.
Let me just follow up on that. I know that not only do you invest in multifamily, but you also do self-storage. And is there anything else that you focus on?
Yeah, we do self-storage and manufactured home parks. And the reason we like those 2 asset classes is if you look back the last 25 years, you've got multifamily, self-storage, and manufactured mobile home parks. Those have been at the top 3 from a real estate asset class perspective, from a return a return standpoint. And those 3 are projected going forward to be the top 3. And so we like them because we call them all-weather assets. They perform very well in a good market. And then in a down market, they still perform well because of the demand. If you think about if we go through some sort of recession, the value add kind of class B multifamily assets we're investing in, from a renter perspective, you can make an argument that if people are looking to kind of cut back, maybe it's the class A, the luxury apartments, and the class B is more affordable. And then you've got the other, renters that are already in that pool that's all they can really afford. They're not going up or down really. So we feel like it from a demand standpoint, from affordable, crisis we've got here in the U.S., it's just a great place to be in. And the same thing with self-storage and manufactured home parks. I mean, unfortunately, people end up losing their job and they have to move in with others that, usually they're looking to store their stuff somewhere. And the average person that rents a self-storage facility leaves their stuff in there for about 3 years. So very kind of sticky business, very profitable. And then the manufactured home parks, we see is just a growing demand, not only for a lot of baby boomers out there that are, looking to retire that might not have a whole lot of savings, but they need an affordable place to live. So that's a great, investment, but then also the mobile home parks too. I mean, those are usually very high cash flowing opportunities and very well insulated because, at that level, there's really not much more to go below. So we just like a combination. I mean, I'm more focused on the value add multifamily, but I think as we look to kind of diversify, they have a lot of the same elements where high cash flow, value add equity upside, and then a lot of the same tax benefits. So that's why we kind of focus on those 3.
Love it. Thanks. And then last question for you. What's your best advice for someone who's just starting their apartment investing journey?
So what I would say is educate yourself and learn from someone else or others that are doing what you want to do. That to me was, it gave me something to follow, something to strive for, to dream for. And then I just started consuming as much as I could. And then eventually over time, you start to meet people that are doing it and you get to talk with them. You get to hear their story. And then you get to, kind of create your own version of it and maybe take pieces of what you've learned and make your own story. So I think first and foremost, just be curious, always be learning. educate yourself, and then surround yourself with people that are doing what you want to do.
Cool. Great advice. Well, look, Ryan, I appreciate your time. I appreciate your expertise and your knowledge about this part of the industry, specifically on the passive investor side of things. Before we sign off, how can our listeners connect with you to learn more about you and McKenna Capital and what you have going on?
So the easiest way is just to go to our website. It's mckennacapital.com. And there's ways that you can get in touch with me through there. You can sign up for our investor distribution list to be kept in the loop with what we're up to. And we're on all the social media sites. So feel free to just go to the website and start there.
Cool. And we'll have all your contact info in the show notes here. Again, Ryan, thank you so much. I appreciate the time. I appreciate you sharing your story and how you've transitioned from having the dreams of playing professional baseball and then having a life crisis happen and having to totally shift your mindset and your energy and your focus into new ventures, and ultimately finding yourself in the real estate syndication space and helping others do what you've done, which is really achieve financial freedom and financial independence through syndication and real estate investing. So I appreciate you sharing your story, appreciate your time, and look forward to connecting with you again soon.
Well, thank you, David. Really appreciate you having me on your show.
Hey guys, thank you so much for joining me today. If you liked this episode, please take a quick second and hit that subscribe button. Even better, leave a quick review. This helps our show get found by others and helps us attract great guests as well. So thank you so much for joining me, and we'll see you next week for another episode.